Well, we have made it to the final week of December. Merry Christmas and happy holidays to you. This will be my final video of 2025 and want to bring you the latest look at activity here in the Central Texas housing market. Well, a few headlines. We'll start with the negative ones. Austin home values declining. Year over year, 89% of properties in the Austin metro area saw value declines. Nationally, we sit about 53%. And Zillow says that puts us more than almost any major U.S. metro in terms of housing price declines. No shock if you've been following my videos. It's been a softer year in Austin. This was in the Austin American-Statesman. Central Texas home values fell again in November. This is number of sales, not price. But buyer interest is starting to show some activity. So, according to the latest article, there was some late surge. Usually, this is kind of, I call them the fall buyers. You want to buy something before the end of the year. But in the Austin metro area, we sold under 2,000 homes in November, down almost 16% from a year earlier. Median price, though, it adjusted about 1%. So, yes, still declining, but very softly in the metro area. However, we're just seeing inventory continue to climb. And I'll show that to you in a couple graphics. Pending sales rose 4.5%. So even though we had fewer sales that closed in November, we did see an uptick in November buyers buying for December. Some of that could be because we have seen rates go down, and I'll show that to you as well. Let's talk a minute about the rental market. This has been the other challenge in our market is supply. We have built over 100,000 new apartment units. If you live here, you're driving around, there's new apartments everywhere. Well, it's going to take a long time it takes a minute to fill those up. So we've passed the peak of construction, but we probably have another year to kind of get back up to the occupancy needed to kind of put upward pressure on rents. So right now, they're not predicting rents to really go anywhere next year. They may not decline that much more, but they're probably not going to increase at least maybe until 2027. So those are the predictions there. All right, well, let's get to some good news as we head into the holidays. So Commercial Cafe, it ranked best cities for startups, Phoenix and Austin, for new business density and growth. Just looking at all the different types of companies that come here. Again, Phoenix, Austin, new business growth and startup density. So if we come down to the chart, this is cities. Now they're talking about city limits. Our metro area is 2.4 million people, but the city limits of Austin, we are just like a few thousand people short of a million. But this is showing you where they're predicting growth. Austin, Nashville, Indianapolis, Louisville, Charlotte. And then you have a lot of the Southwest. And if we go to the over a million, you still got your big East Coast cities of New York, Philly, Chicago. And then, of course, you have the Texas Triangle. And again, you've got Florida and the Southwest. So those hot areas remain hot. We are one of them. Specifically, let's talk about Williamson County. So Williamson County is the north part of our metro. This is cities like Round Rock, where Dell headquarters, Leander, Cedar Park, Liberty Hill, Georgetown, Hutto, Taylor. It is growing like a weed. And so basically, we have a lot of companies that have moved here just in the last 3 to 4 months. Samsung has been opening their big chip factory in Taylor. Apple has a new campus on the north side of Austin. Tesla has operations in Hutto and Taylor, not the main manufacturing plant, that's in Austin, but they have extra facilities in those areas. Dell is headquartered there, and also a company called Firefly, which is now publicly traded, Firefly Aerospace. They're in the space race, just like SpaceX that's here. You have Firefly that's here. Pegatron is a major Taiwanese manufacturing company. They're going to Georgetown. Compal Electronics, Texas Municipal League, ASML Holdings. Some of these companies you've not really heard of or maybe haven't paid attention to unless you're in those industries, but they are moving here and they are still putting down big roots. Here's the real kicker. The county's population of roughly 728,000 is expected to double to 1.6 million by 2050. So 750,000 today, add 25 years, they're going to add 900,000 more people. So they're going to more than double according to this in the next 25 years. So if you want to know where a lot of the big growth is going to be in the Austin metro area, look to Williamson County to the north. All right, let's look at some data in real time. This is where we are as of December 23rd, 2025. We're finishing the year with a huge bell curve of supply. We started the year at 10,600. This is single family homes, not everything for sale, just single family homes. 10,600. We skyrocketed in inventory to almost 16,000 single family homes for sale. We added 5,400 homes by peak summer. Well, that is far outpacing buyer activity. So if we come down here to the peak month of May, that's when we closed the most sales, which was probably April buyers closing in May for the most part. We sold just under 3,200 homes. And that was our busiest month. If I come over here to November, our last month, we sold just over 2,000 homes. So 2,064 is what officially got recorded in the MLS. But we added a huge amount, over almost 6,000 homes from the start of the year. Well, that inventory just takes a long time to work out. And you can see some of these are sales, and some of these are just simply exhaustion. Sellers taking their properties off the market, coming up with a plan B. Either they're renting them out or waiting till next year, or staying in the home. Maybe they're owner occupied. So this is not sales. This is exhaustion. So what's happened is we peaked out just under 16,000. We're back down to 11,300. This is pretty typical for the winter. And the most important date of the year is coming up. It is December 31st. Why is that important? Because I can guarantee you 60 or 70% of the listing agreements out there are set to expire on December 31st. So what's going to happen is we're going to turn the page to New Year's Day, and the MLS will be filled with expired listings. It's going to take a lot of stuff off the market. And then the bell curve will begin again. Some of those listings will just simply relist and stay on the market. Other ones will expire, and maybe the seller waits till this area where see why it really jumps up when you get to April or May. Some of that is these sellers coming back to market. And a lot of sellers believe too that second quarter typically is when you have the most sales. They're not wrong. We have the most sales. The question is price. If you have too much supply, the price isn't really going to move. So really, supply and demand remains the story. I'm cautiously optimistic. This year may be our lowest year for sales. They're predicting next year we're going to see somewhere between 10 to 15% more sales. I don't know what that does with price. That's really going to depend on how much supply comes to the market. Finally, interest rates. Everybody's been watching this story. So we're sitting about 6.25% right now on the 30-year fixed rate. And again, if you have great credit, or you're able to get a point or two buy down, you're now in the fives. So here's what the year has looked like. And this is really the first year since 2022 where we've noticeably seen interest rates, I'll say, decline. So we started the year, here we are on January 14th, we were at 7.25%. So we started this year with really high interest rates. And most of last year, we were bouncing between 6.5% and 7.5%. And the year before, we were bouncing between 6.5% and 7.5%. So we didn't get below 6.5% really until later this year. Here's August. Finally, we got to September. And from September on, we've now been in this kind of 6.1 to 6.4 range. We're sitting about 6.25% now. So we're now a full interest rate point lower than where we started the year. So the reason I have a little bit of optimism is now we've had more price declines, but we're also going to start the year at a better interest rate place than we did at the beginning of 2025. So if those two things can come together, I'm not saying we're going to see prices take off or anything like that, but I think the pain is going to slowly start to work its way out. But the real question is inventory. If we still get high supply and not enough buyer demand, it's going to continue to soften on price. So that is what we need to watch. Anyways, I hope you guys had a great 2025. Make sure to watch our videos each and every week. We'll be posting them on our YouTube channel. You can click the subscribe button at Ryan Kelly Group to follow us there. But until then, happy holidays, Merry Christmas. You guys have a happy new year, and I'll talk to you again in 2026. Thanks.